of Visual JForex, we will be starting afresh with the new indicator. The name is Relative Strength Index. I hope most of you are well familiar with this indicator, and if you are not really new to the trading, you might have even used it in manual settings. And in this session, I will make you familiar with how you can use these indicator, the RSI, for designing and developing the algorithms to trade profitably in the financial markets. You can use it for the forex trading as well as the other segments, the commodity and equities alike. So let us now begin for the day. I will first give you a brief idea about the logic of the algorithm, how we are going to go about designing this algorithm using this indicator. This is the Euro USD chart on the hourly time period, and I will change it to 4 hourly. I have plotted this RSI with the default setting of 14 candle periods. So the indicator, when it is being calculated, it is being calculated on 14 candles, last 14 candles of 4 hours each. And depending on the price action, we get this plotting. When we have the output value above 50, it is indicative of the bullishness of the sentiment for underlying instrument. If it is below 50, it is considered bearish. So that's the standard way to read it. And we can add our additional requirements. We can define that its value should be on the rise and not on the decline. So that way we will cover the risk when the reversal happens, but the value in absolute terms is still above 50, but in relative terms it is declining. So we can add that kind of conditions, and it helps us in improving the profitability of the system. So for today's session, we will use two different time periods. First layering is going to be revolving around the 4 hourly candle period, and as I said, here the idea is fairly simple. We want to trade whenever we have the RSI value above 50, and in these circumstances we will be looking for the buy trade. And as I said, the additional condition is going to be that the last candle period's RSI output should be above the RSI output for the penultimate candle period. And for a sell trade, we will need the RSI value to be below 50, and in decline it shouldn't be rising. So when we have the RSI below 15 and the last candle period's RSI value is also below the penultimate candle period's RSI value, that will be the appropriate time to go short in the Euro USD as per today's setup. And then we will shift our focus on the lower time frame, where the execution is going to happen for any trade provided the 4 hourly candle period conditions are in place. Suppose if the 4 hourly candle periods are pointing to the bullishness for the underlying instrument, and this is the time to go for the entry for any long trade, any buy trade, then the execution will happen as soon as the last hour's closing happens with the RSI value above 50, whereas the penultimate hourly RSI output was below 50. So we will use 50 as a critical marker, and it is also the line which divides the bearish and bullish territory. So we want the price action to enter into the bullish territory from the bearish one, and that will be the time for our algorithm to go for the execution of the trade. And for sell trade, if the 4 hourly conditions are conducive for a sell trade, we will simply look for the RSI output to dip below 50 from above 50. So in last hour, the output value should have fallen below 50. It should be below 50. And in the penultimate candle period, the RSI output was above 50. So that is going to be our requirement. And what we will do to make sure that we don't really get caught up in a situation where the underlying instrument is simply consolidating, and it is having a zigzag momentum, where for some time it is rising, for some time it is falling. So that can happen. To avoid that, first the outer layering of 4 hourly is going to be useful to some extent. As we have said, that last 4 hourly candle period should be higher compared to the penultimate candle period for the buy trade, and that will ensure that to some extent there was buying momentum in last 4 hours, and that's the reason why the output has risen. And on top of that, we will also want to make sure that the closing and the opening difference for last hour was good enough. So we will define certain pip size, pip amount. I think if you consider the ATR value for the hourly candle period for Euro USD, tends to be in a vicinity of around 10 pips. It varies from time to time. Sometimes it is around 7 pips, sometimes it is 10 pips, sometimes even 15 pips. But what we will do to look at the difference, we will take a standard reading of around 7 pips. So the closing for last hour, when we are looking for buy trade, in that circumstances, the closing should be higher than its opening price by at least 7 pips. And when we are looking for any sell trade, we will need to reverse the condition, and in last 4 hours the sorry, not 4 hours, in last hour the closing value should be below opening value, so that will make sure that there was enough of selling momentum prior to we go for the execution of the trade. And whatever was the actual price difference, we will take the 33% of it and place the limit order. So this time around we will be using the pending open, not go for a market open. So that's the whole logic of this algorithmic setup. So now we head to the Visual JForex board, where we will start adding the blocks for successful design of this idea of ours using the RSI. And we will have to start with the instrument subscription. First I will get these if blocks in place. Default variables, default instrument. I will match it to the candle instrument. And then candle instrument will be matched with instrument of choice, which is Euro USD. And we want only one trade to be open at any given point in time. So we will also use this condition that the position amount, all position, should be equal to 0 for before any new order gets placed. Okay, after that I will bring in the indicator block, and it is going to be oscillator RSI. Last time we were using this indicator PPO, percentage price oscillator. Now this session we have moved on to a new indicator. We are going to need 4 of these blocks, first 2 of the 4 hourly candle periods and second 2 of hourly candle periods. I will change this to 4 hours. shift will be 1, and 2. This will be hourly. Shift will be again 1 and 2 respectively for those two candles. Okay, so we have defined these parameters as per our requirement. After that, we are also going to rely on the price action, and for that we will be using the info blocks, info components of get historical candle. Candle period is going to be hourly, and the lookback period is going to be 1. So essentially it is the last hourly candle. And then to pinpoint the exact entry point, we will take the help of two 10-second candles of candle period 10 second is going to be helpful to define us the condition that whenever price starts to drop or rise below the marking point, which is going to be the closing level of last hour, we will be able to act fast. Shift is going to be 1 and 2. Okay, and as I said, we are also going to define the condition that the difference between last hour's closing and opening price needs to be at least 7 pips. For that, we are going to take the help of calculation expression. And we define this requirement of hours using the default instrument pip size and multiply it create new variable and its difference 7. So we have this A1 into A2, and the result of the calculation is going to be our final variable with the required value of 7 pips. Okay, so far so good. So we have our basic building blocks ready now, and with this we can go on to define the conditions. But since we are running short on time, I will be wrapping up the session here. And once I come back in next session, we will resume and we will go on to complete at least the buy side of the equation. And I will be explaining to you how you can define the conditions using if blocks with the appropriate values in place. So that's it for today's session. Thank you all for joining in. See you next time. Till then, goodbye.